Hi, and welcome back to more real estate tips and information. So you just bought your first home and you know in about 45 to 60 days you're going to have to make your first mortgage payment. So what exactly is a mortgage payment? Well, we're going to talk about the technically four different parts of a mortgage payment today. The first part is your principal balance. Let's say, for example, you bought a house for $200,000 and you put down $10,000 as a down payment. So that leaves you with a principal balance of $190,000 that you have to pay back. So each month, part of your mortgage payment goes toward paying on that principal amount. And you can also prepay that principal amount provided your mortgage does not have a prepayment penalty attached to it. And in this way, if you can prepay, that helps you to pay off that mortgage a lot sooner. The second part of your mortgage payment would be the interest. The interest is based on the interest rate and also the amount of the principal amount of the mortgage that you have. So that determines the amount of interest each month. The other thing to think about too is that as you're beginning to make the mortgage payments on your home, each month you're going to pay a little less interest and a little more principal amount. Now those first few years, it's going to look like you're not paying anything but interest because the interest amount is so large. But as you progress through, you will see that each month you're paying a little less interest and a little more towards your mortgage. It might take you a while to get there, but you will start to see that. The third thing and fourth thing we want to talk about are the taxes and the insurance. You're going to have property taxes. They are unavoidable. So your property taxes and the insurance on your home, those monies will be collected each month with your mortgage payment. And what happens is that the person that maintains your loan, the company, will hold that money for the taxes and your property insurance in escrow. So when those bills come out once a year, the person or the company that maintains your mortgage will automatically pay those bills for you. So just think of it like each month you're sending money in to pay on your property taxes and your property insurance, and it is just being held in escrow until that once a year bill is sent, and then the company that maintains your mortgage will automatically pay that for you. But also don't forget to get a copy of that property, the property taxes, so that you can file it on your federal taxes at the end of the year. For some loans, let's say conventional type loans, if you don't pay 20% down up front, well, they will have what's called a PMI, or a private mortgage insurance. This is tacked on to your mortgage payment, or becomes a part of your mortgage payment. And you're going to pay this each month until you reach 80% loan to value for that property. FHA has what's called a mortgage premium insurance, basically the same thing. It's tacked on until you reach that 80%. When you reach that 80%, reach out to your mortgage company and request for that to be removed from your mortgage payment. It can be a couple of $100, so it could be a substantial decrease in your mortgage payment. So don't forget to reach out if you want to have that amount of money reduced from your mortgage payment. Or you could have it applied each month directly to your principal amount, which would be helping to reduce the amount of time that you would have to pay back on that mortgage. So there are some pros and cons to that. Having it deleted means you just have more money in your pocket to spend, or you can just have it designated to go toward the principal each month, which will help pay down the principal amount a little bit faster. So these are the main components of a mortgage. I hope this has been helpful. If you have any questions, please reach out to me. I'd be more than happy to answer any questions that you might have. And we'll see you next week for more real estate tips and information. You have a wonderful day.